Hello friends, Altcoin Insider here, and welcome to the channel where we analyze the main assets of the cryptocurrency market without unnecessary emotions, relying exclusively on charts, metrics, and fundamentals. Today on our radar is a coin that all of institutional Wall Street is talking about right now, but which retail investors stubbornly ignore for some reason. We are talking about Hedera Hashgraph, ticker HBAR. If you follow my reviews, you know I always try to look deeper than the headlines of the yellow crypto press. We look for assets where real, smart money is building infrastructure while the crowd chases meme coins. And what is happening with Hedera right now, in the first quarter of 2026, is no longer just news about a potential partnership. This is a tectonic shift in the entire global financial system. Today we will break down the HBAR chart from the weekly to the daily time frame, talk about how the recent historic launch of BlackRock's treasury fund on Hedera changes the game, why the logistics giant FedEx launched its own node, and most importantly, answer the question, mathematically and technically, is it realistic to see HBAR at 1 in this cycle? Brew some strong coffee, get comfortable, and let's start our deep dive. Before we jump into the charts on TradingView, we need to understand the macroeconomic context of 2026. We have definitively transitioned from the phase of speculative talk into the era of structural maturity. What does this mean? For the past few years, we've constantly heard trendy acronyms. RWA, Real-World Asset Tokenization, Enterprise Blockchain, Institutional Adoption. Until 2026, all of this was at the level of pilot projects. Corporations tested networks, launched test smart contracts, and wrote beautiful press releases. But now the sandbox is closed and the real game has begun. Big capital has started moving real liquidity onto the blockchain. And this is where Hedera steps onto the stage. Having positioned itself from day one not as an Ethereum killer for JPEG NFTs, but as an ultra-reliable, legally compliant layer of trust for transnational corporations. BlackRock and tokenization. The transition from paper to cryptography. Let's start with the main fundamental catalyst that occurred in February 2026. This news should have blown up the market, but many still haven't realized its scale. The world's largest asset manager, BlackRock, officially migrated its institutional cash series ICS treasury fund onto a live production environment built on Hedera Hashgraph. Hear me out, this is not a test. These are multi-billion-dollar liquid instruments backed by U.S. Treasury bonds that now operate directly through the Hedera Token Service, HTS. BlackRock sent the clearest possible signal to the U.S. Treasury, the Fed, and the SEC. The Hashgraph network is no longer a corporate experiment. It has become an operational extension of the American balance sheet. For years, traditional finance suffered from friction clearing delays, bureaucracy, paperwork. Since February 2026, the HTS service has officially become the engine that kills this friction forever. We are watching a historic transition from paper ownership of assets to cryptographic ownership right now. And for this machine to work, to transfer these tokenized billions, HBAR needs to be burned as gas. This is the purest fundamental demand. The evolution of global logistics. FedEx enters the game. But if you think institutional adoption ends there, buckle up. On February 13, 2026, the global logistics giant FedEx officially joined the Hedera Council. This means they didn't just buy tokens. FedEx now runs its own node on the network and has equal voting rights alongside Google, IBM, and other corporations on the council, directly participating in the network's software governance. Why does a courier company need a blockchain? The answer lies in global supply chains. As FedEx representatives stated, their goal is to make global commerce operate at the speed of data, not the speed of paper. Hedera provides a neutral, enterprise-grade layer of trust that allows data verification on a global scale. Imagine FedEx won't upload confidential data about your packages to the public domain. Instead, they will use Hedera to exchange cryptographic proofs, data fingerprints, timestamp customs declarations, and certificates between partners while keeping the actual data in their closed systems. This drastically reduces friction and costs in cross-border trade. And again, every such confirmation on the network requires an HBAR token. Mastercard and AI commerce. Perfect synergy. You know that on my channel, we pay massive attention to artificial intelligence tokens like TAO, Bittenser, and RNDR render. AI is the absolute trend of the decade. But the question arises, how will autonomous AI agents interact with each other financially? If one AI wants to buy data from another AI, how will they execute the transaction securely and transparently? Here lies the third massive fundamental factor for Hedera. Mastercard is currently actively utilizing the Hedera Consensus Service, HCS. What for? To create a tamper-proof log of every transaction initiated by AI agents. Hedera provides that exact immutable timestamp and strict ordering of events that ensures fairness and auditability for all AI commerce. Think about the scale of what is happening right now. We are getting a symbiosis of AI agents from Mastercard and the Hedera consensus algorithm. That's astronomical. Alright, we've sorted out the fundamentals. It's absolutely bulletproof here. But we are investors, and we care about tokenomics. If a project prints coins at the speed of light, no BlackRock or FedEx will save the price from dropping. Let's look at the numbers relevant for early 2026. The maximum supply of HBAR is strictly capped at 50 billion tokens. As of today, in March 2026, there are already about 43 billion coins in circulation. What does this mean for you and me? It means that over 85% of the total emission is already unlocked and on the market. This is a critically important point. Many new altcoins hit the market with 10-15% circulation, and investors get diluted by token inflation for years. In the case of Hedera, the risk of a sudden supply shock from early investors is practically reduced to zero. The Hedera treasury releases the remaining tokens to the market in a very controlled manner. When the market supply of an asset is limited, almost at its ceiling, while fundamental demand from gigantic corporations is growing, exponentially we get a classic scarcity model that inevitably leads to asset repricing. Deep technical analysis. What do the charts say? Now we close the news, an open trading view. No matter how good the fundamentals are, the chart always shows us the entry point. The current price of HBAR at the time of recording this video is trading in the 0.1–0.12 range. If we look at the daily time frame, we see a clear picture of accumulation. Locally, the asset has formed rock-solid support around the 0.097 mark. At the end of last year, we saw a powerful impulse when HBAR broke through important resistances and reached the 0.24 mark. After that, naturally, there was profit-taking and a pullback. But pay attention to the structure of this pullback. We did not make a new global low. Buyers, whales, aggressively bought up the dips below 10 cents. From a technical perspective, indicators. The MACD on the daily chart is starting to form a bullish crossover. The histogram is fading, showing a decrease in selling pressure. The RSI, Relative Strength Index, spent a long time in the oversold territory and has now started pointing confidently upward, sitting in the neutral zone. We have a colossal runway for growth. Moving averages. We are currently fighting to consolidate above the 200-day EMA. As soon as the daily candle closes full-bodied above this moving average, it will become a massive trigger for algorithmic trading bots to buy. Fibonacci targets. If we pull the fib retracement from the macro bottom to the 0.24 peak, the nearest major resistance lies in the 0.135, 0.1 6 block. Once we break through and consolidate above 0.16 on good volume, the road to retesting the 0.24 will be open. And breaking the 0.24 means entering the turbulence zone where the price discovery phase begins, and the asset can grow almost vertically due to the lack of historical resistance levels. Hedera's place in the market. HBAR versus XRP and XLM. Often in the comments and in my Telegram you ask, Insider, we already have XRP and XLM, why do we need Hedera? Won't they kill each other? My answer, no. These are fundamentally different target markets. XRP and XLM focus on the banking sector, cross-border payments, replacing the outdated SWIFT system, and transitioning to the ISO 20022 standard. They have their own war going on there, where new banks using the XRP ledger are already operating parallel to the sluggish traditional financial giants. Hedera, on the other hand, is building an entirely different foundation. Their focus is the enterprise sector, logistics, real-world asset, RWA tokenization, and the Internet of Things, IoT. There is room for everyone. Banks will route liquidity through XRP, while FedEx supply chains and Mastercard AI agents will use the Hashgraph consensus. These are parallel ecosystems that might even interact with each other through bridges in the future. Price prediction. The math behind one. So, let's get to the best part. Answering the main question of the video, is one for HBAR realistic in 2026-2027? We turn off our emotions and turn on the calculator. At a price of 1 and the current circulating supply of 43 billion tokens, the project's market capitalization would be 43 billion. To an average person, this sounds crazy. But for the crypto market in a euphoria phase, these are absolutely normal numbers. Look at past cycles. ADA, Cardano, or Solana easily flew past 70-80 billion in market cap at their peak. And back then, they didn't have officially launched BlackRock funds and FedEx nodes. Various analytics platforms like Changelly and CoinCodex give rather conservative forecasts, expecting an average HBAR price in 2026 around 0.15–0.22. This is a baseline restrained scenario calculated by a machine algorithm based on historical data without factoring in exponential adoption. But experts analyzing the speed of technological adoption, particularly bloggers from channels like Blockchain Crypto, cite different numbers. If the current trends of enterprise adoption continue, HBAR has every chance of landing in the 1.2 range at the peak of this cycle. And if the market enters a state of total FOMO, where the total crypto market cap surpasses 4 or 5 trillion, we could see a pump all the way to an incredible 2.4, 4.8. Personally, I prefer to remain a conservative pragmatist in my trades. For me, the first major zone for partial profit taking is the breakout of the all-time high at 0.5. I'm ready to ride the rest of the position up to the psychological mark of 1. The risk-to-reward ratio for buying in the current 10-12 cent range is simply phenomenal. Let's summarize. The cryptocurrency market is irreversibly maturing. We are at a point in history where the speculative froth from meme coins will gradually settle, and assets with real utility and institutional money behind them will take center stage. Hedera is building a concrete foundation for the new global digital economy right now, uniting massive narratives like AI, RWA tokenization, and global logistics. Friends, what do you think about HBAR? What price are you expecting in this cycle? Be sure to drop your thoughts in the comments. I read absolutely everything and try to reply to everyone. If this analysis was helpful, support the video with a like. It really helps the channel grow. Subscribe so you don't miss urgent analytical updates and hit the bell icon. This was Altcoin Insider. Take care of your health, trade with a cool head, maintain strict risk management, and remember, the one who knows how to wait wins in the market. See you in the next video. S. See you on the charts.